Good morning, guys. Let's go into it. It's our second pre-game plan on the third week of March, being Tuesday, the second day. Yeah, let's start with the pre-game plan for the London session. Just to recap and review the higher time frames in order to have some overlook over the markets and what we could expect. I already mentioned it, but let's hop on quickly to the monthly for the people who are watching our pre-game plans new. On the monthly time frame, we are bearish. Looking into that, we have our structure lower high to lower low, being a retracement after it testing the bearish leg, creating the lower high, building up some liquidity, and therefore breaking that lower low. In that sense, we are having our last bearish M monthly leg from that lower high to our lower low, which led price into a retracement from that lower low. After that accumulation, price induced down and gave us a very nice weekly bullish leg, which we will gonna take into consideration right now, as it's more important than the monthly leg. What we do want to note from the monthly bearish leg is that after we came into premium, price accumulated orders, built up liquidity, and induced to the upside, having a bearish liquidity cycle, which is a build-up of liquidity inducement into a very important mitigation, which has been this objective after the break and test here. Price mitigated into that bearish block, being the monthly extreme supply area, and therefore what we could expect on the monthly time frame, as we already mentioned, is that we're gonna have a potential deeper retracement long term wise towards the downside into very nice areas such as the yearly IFC, which price can fulfill, or the very nice objective, which is the structural decisional demand area of that weekly bullish push, which we're having, as the price after inducing that structure low had that change of momentum towards the upside. We managed to break that high here, which led into a bullish weekly push, which we're having. So structure cycle wise, important structure POIs are gonna be our extreme, which you're gonna mark, as well as the decisional, which is being a supply to demand. These are gonna be the most important POIs for you now. The rest, such as the IFCs, you can mark later on. It's not that important, and very important to mark is that objective, which has been the break and test liquidity, which is sitting above our structural supply to demand POI. So it looks amazing. If price mitigates into it, we can have very nice cycles with a inducement into mitigation, potential buildup of liquidity, and afterwards pretty nice buys towards the upside, which also can lead long term to higher highs, as on the monthly time frame we have liquidity left, because the moment on we broke low, price tested the bearish leg, and what would have been very beautiful for price to confirm me that it's very bearish would have been after that liquidity build up towards the downside, the second tap. But the second tap never happened. Price holded that IFC, respected the IFC, more so building up liquidity. So as we do have nice targets towards the upside as well, which is really long term, so it's a projection, nothing too important. We could potentially expect the supply area to give a reaction towards deeper areas into the retracement of the weekly bullish leg, which we have marked already. But in theory, we can expect higher prices potentially, which again is a long-term projection. It's just my opinion. I do not take that in consideration into my daily analysis at all. So looking into the just to finish the monthly time frame, we had that build up inducement of previous week's highs, which has been liquidity into a bearish objective, being the monthly time frame extreme supply area. So we could expect a rejection, as price has also rejected. We do see that indecision candles, and after indecision candles, price ended up melting towards the downside. So after having that aggressive bearish momentum towards the downside, we can definitely expect price to have such nice selling areas in that area, which we're gonna dissect on the lower time frame confirmation. So if price gives any retracement towards the upside, sells towards the downside into the bullish objective of the weekly bullish push, can be very nice selling opportunities, but we just take as well into consideration that our current daily internal bullish leg has been broken. So our internal daily structure was from the low to the high. After the retracement, we build liquidity, induce structure to the left, being a structure low. After the inducement, price pushed higher, broke, again retracement, build up, efficiency of the pullback completed, change of momentum in structure, and price continued creating a higher high. So the last higher low has been this low, this has been broken, so we have a break of structure on the daily time frame. We change bearish, as well aligning that with the monthly projection, which we have mentioned, being the build-up, the inducement, and the mitigation. It aligns very well to have a deeper retracement to the weekly bullish push, as already mentioned. So this is why I'm saying any retracement towards the upper areas can be sitting seller sensitivity, from where we can get very nice cycles towards the downside. But for now, it's very important that we have broken the structure now, the higher low. So the major inducement we have been creating here previous day, being Monday yesterday, the candle closure was pretty bearish. So the most important thing here now is, I do think we are in position. Let's hop on, we can already hop on the daily, or no, let's stay on the weekly. What I do think is that it's, in my opinion, too early to buy due to the facts which have been mentioned, and as well the daily candle closure from yesterday's candle. And what I do also not like at all is that price didn't run previous day's low, which would have been giving me more conviction to buy into deeper areas and into the retracement of the lower time frame bearish leg, but price didn't. So I do think that any fulfillment towards the upside into that I see here can lead to a follow through and rejection towards the downside, due to the fact that the candle closure was bearish, as well as the monthly time frame which we have been dissecting, and that price didn't take that previous day's low, which is giving me a lot of doubt. So in my opinion, you should not call the retracement and get into any early buys due to that fact. And yeah, it's true that we had a major inducement into a very nice buyer sensitivity area, a bullish block being a demand, which can give you very nice rejections and reactions towards the upside and very nice trades. But for that, the daily candles need to align. But if we go now to the daily and we hop onto the daily, by the way, here you can see it more clearer, the structure. We're at that higher low, creating that higher high, price broke that higher low, so our daily changed bearish, as well as our H4 structure got broken. After that break, price tested the test, which has been an engineered high, has been induced, and after the inducement we have a very nice follow through towards the downside, which has been very aggressive. So looking into the current position we're in with that major inducement which we're having, and the mitigation into the buyer sensitivity block in that area, which can give a reaction and lead into a retracement towards the upside, we want to take two things into consideration here. It's just being the momentum which we're having, so we can't know when the expansion of the bearish leg is gonna end, and therefore we need to be careful with buying. So after having this push down, push up, which has been very aggressive, it's true that any fulfillment down can lead into a follow through towards the upside into premium areas of that bearish M15 leg, and in premium areas we can get very nice sells. That's being here, that can happen. Yeah, what could as well happen is that we continue the bearish momentum towards the downside. So from a daily time frame, what I do want to take in consideration is that I have pretty nice areas here which I have been marking on the lower time frame confirmation, from where sales can be pretty interesting. But we do see price already mitigated yesterday within that supply seller sensitivity area, so it's gonna be a bit difficult. We're gonna see what we can do, because probably price is gonna attack that liquidity to then continue lower, if so. And yeah, this is what we're gonna take out from our daily time frame. So it's gonna be basically that we're sitting in a buyer sensitivity area, being a demand after a major inducement, which can give a reaction. So any reaction towards the upside are gonna be counter trend buys. Why? Because our current direction on the lower time frame is being bearish, which we can clearly see here. So any buys will be counter trend, more aggressive. Any sells are gonna be pro trend, very nice aligned. If you do want to have very nice sells, you will need to wait until price comes into premium, into nice areas, gives any cycle like a liquidity cycle, previous day's highs inducement, a follow through, a mitigation. Any sells can be pretty nice taken, but for now we could expect a retracement towards the upside. But let's dissect on the lower time frame as the price already mitigated into a supply. So let's hop onto the H4 quickly. What we can see here again is our internal current bearish structure, which has been bearish. Pretty nice to see. We push lower from that monthly mitigation. Price retraced into the daily IFC, leading to an expansion towards the downside. Quick accumulation, again a lower low. Then here engineered high, which has been induced, and that's being our last bearish M15 leg, which you're gonna mark. In that last bearish leg, we do have our very nice extreme supply area with that break and test, being break and test liquidity, very nice objective where price can mitigate. Where price can mitigate into. So any indecision candles, if we come here up with an inducement of previous day's high and a follow through towards the downside on the daily candles, a fulfillment towards the upside can give very nice cycles towards the downside. But for now, we take in consideration that we're sitting in discount. So in discount, after the major inducement and the mitigation, we can expect a retracement towards the upside. So that's very likely. But what we can see here now quickly, after the price induced one more time lower, we had that push down, engineering liquidity, inducing it, having that push out, changing momentum after the rejection candle here on the H4 time frame, which led into an aggressive follow through towards the upside. But what is very interesting to see here in that sense is that we see that interaction with buyers and sellers. In that sense, you do see that block here. It's true that that block didn't take any significant liquidity, maybe previous day's high here, yeah. So this candle is gonna be of seller sensitivity, which looks pretty nice. But we do take in consideration that we have higher POIs as well, where price can mitigate into. But what is important on that POI is that if you look into the structure cycle from that lower high to that lower low, this has been our decisional supply block. So a very important structure POI from where we can expect price to create lower lows, especially as we broke that high low on the daily and we have been changing direction towards the downside. It can happen. I'm not telling it will happen, because price can interact with that supply now, have that retracement towards the downside, induce something to the downside, and continue with a bullish follow through to the upside to complete efficiency of the pullback into premium and to mitigate into the extreme, which has been our destination and target, or what could be as well our target. So looking into that, this is very important. This is what we're gonna take out of our H4. What we do see is already a mitigation into the decisional supply block, which is pretty interesting. A rejection, indecision candle. Last candle has been pushing down, inducing liquidity and rejecting towards the upside. So this potentially can become a smart money trap, this decisional, but that needs to be confirmed. That needs to be confirmed definitely. In that sense, we hop into the H1, and under the H1 we can clearly see, after the rejection from that decisional supply, which hasn't been taking any significant liquidity, so it could be potentially a smart money trap, but I'm gonna mark it as my decisional supply, as I do want to see how price reacts from it and interacts with. So after we have taken liquidity towards the downside, having that internal medium inducement on the lower time frame, we do see how the price is currently showing extremely bullish pressure. So in that sense, I will not interact, I guess, on the London session EU. I can see it already here. Why? It's very easy to tell, because after we added major inducement under the buyer sensitivity area, price changed momentum by pushing up, reacting and absorbing supply, inducing to the downside, which is already showing the switch from sellers to buyers, and aggressive follow through to the upside. So we do see inducements are taking control. The buyers, first one push out, second one push out. So buyers potentially are in control. But looking into the current situation we are in, price has as well mitigated into the decision on supply area. And this objective, which has been met, led into a change in momentum as well, because after having that run of the liquidity here, or the previous candle's liquidity, price pushed lower into demand area, absorbed demand, induced higher. After the inducement and the follow through, price confirmed that bearish pressure and change in momentum. So which means that I can't know, in my opinion, if price is gonna take that liquidity and continue higher, or respect that supply area and lead into a push lower. So I do as well see already that price is more starting a range, which is normal and which makes sense, as price is consuming sellers and buyers, accumulating orders and having equilibrium in price. So we could see a potential range in price and a breakout at any time after the range. But for now I do think that I will not interact, because looking into counter trend buys, reversals doesn't make sense. My idea was potentially to have reversal buys after this structure low, internal medium inducement, but price already taken it at 7 o'clock, which gave a very nice rejection towards the upside already. So this scenario is gone, which means there are no buys anymore. If price gonna take that structure low here, I do not think I will interact buying, as I do not like it. We have mitigating that supply block, which has been a very nice supply block in my opinion, due to the fact that we had absorbed that demand, leading to inducement of a structural high and a very aggressive follow through towards the downside, so we could continue that bearish pressure. So buys are gone in my opinion. I will personally not interact expecting that supply to be a smart money trap, as I would lead myself into a range which I would trade, and I do not like that. I personally can't confirm any control of buyers or sellers due to that mitigation and the change in momentum of the sellers afterwards, that inducement, which led into a very nice rejection towards the upside. So it's gonna be very difficult session to trade in my opinion. You could potentially, from a structure cycle, expect after decision M15 supplier area has been mitigated, that price can continue lower, but as well in that sense we couldn't have any model due to the Asia range printed and due to the internal median inducement, which we're already having. Not continuations, not reversals. In that sense I will more so wait. Yeah, my projections for the session are gonna be very clear. I do think that the price can continue pushing price higher, potentially engineer a low, induce the low and continue higher, which will be my confirmation. If this price develops like that, I could have potential buys here. If not, I can expect a failure to create a high and a mitigation into the weak demand, inducing up and continue lower. This is what I can expect for the session personally, but looking into reversal buys, it doesn't make sense. Price already took that internal medium inducement liquidity, and a rebuy after that structure low I wouldn't personally. And a continuation buy would not make sense, only if price develops as I was mentioning here, which will not happen on the London session. So I do need that confirmation to buy. I will not if price doesn't present that. Having any sells, I do not like it due to the fact that price didn't take previous day's high to continue lower, so I do want to have that follow through in price and the inducement, the cycle, which is giving me conviction that price is gonna continue lower, and any fulfillment towards the upside can give me then better sells. So I do not need to be first hands and aggressive. It's Tuesday, the first session, so we do have time. And in that opinion, in that sense, that's it for the pre-game plan. So there will not be any significant trades which you would take, in my opinion, from my side, from my opinion. And yeah, stay safe, preserve your capital, and have fun.